Well, let's get right to it. The escalating tensions between Beijing and Washington sending shivers through the financial markets, as we've been telling you. Investors fearing a trade war could have dire consequences for the global economy. And in fact, today, Beijing saying it plans to roll out retaliatory tariffs on $3 billion worth of U.S. goods. For more on all this, let's bring in Josh Jalinski of the Jalinski Advisory Group and Armando Soto of Zelphinium. Boy, I hope I said that right. So, Josh, let's start with you if we could. You know, you look at this intensively. I would expect in our markets, Boeing, Caterpillar, FedEx, GM, companies with big international exposure to be down and down dramatically. But in fact, all stock markets are selling off right now across the globe. You look to Europe, you look to Asia, our market's selling off. Is this overdone at this point?
Sure, I really think it is overdone. We were technically due for a breather. We had months and months of the Trump bump uninterrupted. But I think what you want to look at for this week, you saw Facebook, people started to get worried about big data, the trade wars, which if you think about it, China deserves some action against them. They are continually a serial abuser of our intellectual property. I think long term, that could actually be a strong thing for our markets. Think about how much intellectual property they steal. As far as Facebook, I think a big thing that people are worried about is big data. Was this Republican breach a precursor to much more data mining operations? Nobody would have been talking about this if this was the Democratic Party, but because Steve Bannon did it, it's all overblown. So you have big data, you have China, you have a lot of stuff
and that's
going.
Exactly the point I was going to make. Pick your reason for the market selling off. There's certainly a lot of them, but I think foremost in investors' minds across the country really is this looming trade war. We just brought up IP. Josh just mentioned it. But Armando, when you look at this, yesterday, Wilbur Ross saying that there's something like 10 million in U.S. patents. That's the value of them. But you wouldn't know that because China continues to steal this technology from us. Is it worth sending these markets into turmoil, as we've just been seeing, to recoup that money to make sure that America's technology is protected?
Well, the market sell-off that we saw yesterday is just continued volatility that we'll continue to see in the coming months. I think there are many factors that affected this sell-off, and part of that as well is not only the quote-unquote trade war, but also the flattening of the bond yield curve, where the 10-year Treasury is paying a little bit over 100 basis points more than the 3-month. So the last time that the yield curve flattened out and inverted, we had a recession. So I believe that a lot of the smart money took note of this. We also have the trade war, which I believe Mr. Trump the president will come down and negotiate a great trade deal for America. Right. The market will probably continue to go up as long as we see the continued growth in earnings for companies here in America. And I believe we're going to see volatility in the near term, continued volatility in the near term.
All right. And so that's the point, right? You know, we're here in the middle of this whole trade discussion, right? Interrupting markets across the planet, across the globe. Josh, what will it take for investors to focus on something else, like, say, U.S. GDP or earnings of the S&P 500? And what is the calculus right now that traders are making as they look at markets? Are they willing to make distinctions yet?
I think the biggest concern is the Fed. If the Fed hikes rates more than 3 to 4 times this year, which they were signaling this week, that could be 6 to 12 months, a precursor to a much larger recession. I think that's what people are worried about. I do believe that corporate earnings could grow. Banks have substantial balance sheets with the effects of the Trump tax bump. I mean, you got to realize nobody's really seen the true effect. We'll see that next year. People aren't doing their tax returns until next year with the Trump bump. You're having a lot of activity. I think some of this is overblown. Technically, we were due for a correction.
All right. I apologize for interrupting you. Yes, it's so true. There's so many positives, so much wind at the back of the market, but it's not realizing it today. Josh Jalinski, Armando Soto, thanks so much for coming on and sharing your expertise.
Thank you.
Appreciate your time.